Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's get a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Tatiana Darrier. Tatiana, what are you looking at today?
Well, kicking it off with a Tesla down 3% today as profits missed despite a record quarter of sales. So a beat on sales, better than expected cash flows, but operating expenses soared 50% to $3 billion in the quarter. That almost matches the amount of free cash flow that they generated, which goes to show that the company isn't immune to the rising costs that we see in the auto industry due to President Donald Trump tariff policies. But most importantly, it also shows that the company is heavily spending on its robotic and AI initiatives. Well, after that call, investors are left with more questions than answers because Elon Musk discussed ambitious but yet vague initiatives in robotics and AI, saying he'd be surprised if 5 years from now they're not making 100,000 robots a month. That sounds great, but 5 years is a long time. Those investors aren't quite comfortable with the comments that they've heard. Shares are down 3% and are trailing the Magnificent Seven year to date.
That phrase was key. Ambitious yet vague. That kind of sums up everything right about Tesla right now because we're not clear what the growth drivers are in the near term. Tatiana, you're also looking at LC, Lending Club.
Lending Club. So the peer-to-peer lender posted earnings that beat expectations, and its guidance for origination was ahead of estimates. Those shares are up 15%. Your ticker is LC, and the solid results earned the company an upgrade from JPMorgan to overweight. So the stock now has 9 buys and 2 lonely holds and no sells. Importantly, their originations rose 37% year to year. So investors like that, but it almost makes you wonder, what stands behind this sort of rush into loans and borrowing. But at the same time, importantly, they provided more disclosure on their provision for credit losses, which fell year over year and were below estimates. So if, there were concerns that consumers are falling under pressure due to the weakness in the labor market and tariffs, this is yet another key company that is telling us that those concerns are contained or limited for now.
That's the question, I think, for a lot of these stories that are coming out about credit in the credit markets. How, not to use John Tucker's word, idiosyncratic are they, or how systemic are they? I don't know. People are trying to get a handle on that. Exactly.
And that's why we keep monitoring one by one to see if it's more widespread than just a few names.
Gotcha. Okay. Dow.
Dow shares are up 11% now. Dow Chemical, really? Exactly. Your ticker is DOW. Operating EBITDA beat the average analyst estimates as volume rose. Analysts said they saw upside driven by packaging and specialty plastics. However, they noted that the backdrop for commodity chemicals remains weak. And I think, this is a very important name to go back to the credit concerns, because this is one of the industry that those credit investors are watching very closely after the auto industry, because it has been for some under pressure for some times, battered by many headwinds like weak demand, tariffs, and capacity constraints. So far, Dow provides a good result there that should allay some of those concerns. This is a name where sentiment has been very negative. If you look at the stock, is down 45% this year, so it can definitely use some good news this morning.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.